Assalamualaikum to Madam Nur Faiza. We are from Group 1 AC2204D would like to present about MFRS 8, which is operating segments, and MFRS 134 of interim reporting. The company that we have chosen is Seng Consolidated Berhad. I am Nur Hasya binti Haliludin as your executive accountant. Without further ado, let's get started with the company background. Seng Consolidated Berhad is a public company listed on the main market of Bursa Malaysia Securities Berhad. One of the board director in this company, who is Dato' Edward Lee Ming Fu, is the managing director of Seng Berhad. HSCB is a diversified group with 6 core businesses, namely plantation, property investment and development, credit financing, automotive, trading, and building materials. The plantation segment is involved in the cultivation of oil palm and processing of fresh fruit branches. Started as a sun-dry shop in 1946 under the name of Seng, which means unity and success, the company expanded into the timber businesses and thereafter rubber, cocoa, and oil palm plantation, with the incorporation of the River Estates Limited in 1950, the precursor of Seng Plantation Holdings Berhad. The vision of this company is all about creating values together and emphasize on value creation, operational excellence, and sustainability. The next presenter will be Nurhani Umairah.
Hi and Assalamualaikum. My name is Nurhani Umairah binti Abd Malik and I'm going to present about management approach. The first thing is factors in considering segment reporting. Firstly, the factors in considering segment reporting. There are 3 factors that need to be considered, which the first one is nature of business. It defined as any activity that is being carried out by an entity with the main objective of gaining profit maximization. The nature activity of Seng Consolidated Berhad is investment holding company, which engage in business plantation, property investment, development, and many more to be explained later. The second factor is information presented to Board of Directors. Operating segment can be determined based on the report reviewed by the Board of Directors and senior management. This information include sales, revenue, expenses for each activity to make a better judgment of the company performance. Lastly, the existence of manager responsible for activities. Each of the operating segment generally has a segment manager who directly accountable to and maintain regular contact with chief of decision making. This role is important to ensure that operating activity, financial result for the segment to be discussed. Next, we move on to type of segment. The first one is plantation. It is cultivation of oil palm and processing of fresh fruit bunches. Second is automotive. They involve in trading in motor vehicles, spare parts, and servicing of motor vehicles. The next one is credit financing. It is a provision of financial service. Next one is trading. They involve in trading and distribution of fertilizers and agrochemicals, trading of general building materials, petroleum products, and manufacture and trading of tars. Next is property. It is a property investment and property development. And the last one is building materials. It is the operation of stone quarries and asphalt plants and manufacture bricks. Dato' Edward Lee Ming Fu, who is a managing director, is the chief of decision making in Seng Consolidated Berhad. Its responsibilities are, the first one is allocate resources and assess the performance of the operating segment. The second one is he is responsible for strategic decision making regarding the entity. The third one is overseeing the management of business and affairs of the group, including the commitment to sustainability in the best interest of the company. And the last one is disclose information to enable users of the financial statement to evaluate nature and financial effects of the business activities.
Hi and Assalamualaikum. I am Amirah Hilmi, your new accounts executive. I will discuss the process to identify reportable and non-reportable segment. Under MFRS 8, an entity shall report all information separately with regards to the operating segment if it passed the 10% quantitative threshold test and 75% test if the company applies revenue basis. The 10% threshold test consists of 3 tests, which are revenue basis, profit or loss basis, and total asset basis, where they must meet the requirement of 10%, and if they don't, they will be combined and disclosed under all other segments in the segmental report. Since Seng Berhad is using revenue basis, The 10% threshold test will be evaluated based on their total revenue. After the determination of the reportable segments, the company must do 75% test where the total external revenue of reportable segments over total external revenue of all segments should reach at least 75%. Based on the segmental report prepared by Seng, the calculation shown using the 10% threshold test found that there are 4 reportable segments. It consists of plantation 11%, property 26%, automotive 20%, and trading 34%. Meanwhile, the other 2 non-reportable segments consist of credit financing 5% and building materials 9%, which will be combined and disclosed under all other segments in the segmental report. Since Seng applied revenue basis, the company must do the 75% threshold test, and we can find that the total external revenue of reportable segments for Seng reached 88% for the year 2021. Next, I'll pass to Fakhira for the newly produced segmental report.
Thank you, Amirah. Assalamualaikum. My name is Nur Fakhira and I will present about the new segmental report. As shown, the new segmental report of Seng is reconstructed reproducing 4 reportable and 1 reportable segments. There are 4 reportable segments consist of plantation, property, automotive, and trading, whereas the other 2 non-reportable segments, which are credit financing and building material, are combined and disclosed under all other segments since it does not satisfy 10% or more. Hence, the adjustment of operating segment by both are essential in determining the reportable and non-reportable segments, as well as the preparation of segmental report.
Thank you, Fakhira. Hi, Assalamualaikum. My name is Ummi Aishah, and now we are in the last section of segmental reporting, which is the conclusion of several advantages and disadvantages of segment reporting on how the information is used. The first advantage is pressure of profitable segments. Transparency is one of the most important benefits. Thus, the company's management can take various steps and initiatives to maintain the segment's profitability while increasing the profit of the other segments. Next, gives better understanding of the financial statement. Segment reporting enables shareholders to gain a better understanding of the variables that may affect overall numbers. For instance, the report showing where those the earnings coming from and can help shareholders to determine whether the earnings are sustainable or instead. Hence, this reporting is intended to assist the investor. Another advantage is lower cost of capital. The risk of investing in the stock of a firm that reveals all information is theoretically lower than the risk of investing in the stock of a company that will hoard information. Next, we will move on to the disadvantages of segmental reporting. Firstly, data manipulation. The segmental reporting information can be manipulated as well as it may be reported through the view that management wants the user to see. For example, if the data is presented in true management styles, segment reporting lends itself to data manipulation. Therefore, the users of the financial statement will get a false idea of the performance of the company. The other disadvantage is placing a strong emphasis on the present. Segment reporting can place too much of focus on the short-term numbers. Companies report their segment using short-term data and neglect the long-term figures, although knowing that this can give a long-term impact to their business. Lastly, based on segmentation, the split of diversified organization for segment reporting purposes is a basic challenge that emerges in segment reporting. Segments can be created in a variety of ways depending on the segmentation base. Thank you. I will pass to the next presenter, Umairah.
Next, I'm going to present about basis of preparation. There are 2 methods, which are integral method and discrete method. In this case, Seng Consolidated Berhad used the discrete method, which is the interim financial statement, have been prepared accordance with MFRS 134. The company also based on paragraph 9.22 of the Bursa Malaysian Securities Berhad listing requirements. The company should be read in the conjunction with the group's audited financial statement for the year ended 2021 and the accompanying explanatory notes attached to the interim financial statement.
Thank you, Umairah. Next, for the 2 accounting policies used by Seng in preparing their interim report can be seen from property, plant and equipment and investment properties. Seng initially recorded their PPE items at cost, which is stated at any cost less accumulated depreciation or any accumulated impairment loss in accordance with MFRS 116, except for freehold land. The carrying amount of all PPE items are to be reviewed for impairment when there are changes or events. The depreciation is done based on straight line method. However, the freehold land will not be depreciated. As for the derecognition, the PPE items is derecognized upon disposal or when there is no future economic benefits expected from its use. As for investment properties, the items are initially measured at cost, including transaction costs, and will also be measured at fair value. Any gain or losses arising from the changes in fair value will be recognized in statement of profit or loss. The derecognition of investment properties is to be done upon disposal or when there is no future economic benefit. Any gain or losses arising from the disposal will also be recognized in statement of profit or loss. The reclassification to or from investment properties are made only when there is a change in use.
Seng Consolidated Berhad applied condensed set of financial statement in preparing their interim financial report rather than complete set of financial statement. Set of condensed financial statement consists of minimum content for the current period and comparative prior period information, such as these condensed statements should include as a minimum each of the heading and subtotals that was included in its most recent annual financing statements, selected explanatory notes as required by the standard, and basic and diluted earnings per share of the face of the statement of profit or loss and other comprehensive income.
Now, I will present the period for the current and comparative of each statement is prepared by Seng Berhad. The accounting period will end on 31st December each year. The period for the current and comparative of each statement prepared by the company according to MFRS 134 will be measured at 1st April 2021 to 30th June 2021. This is equivalent to the second quarter of Seng Berhad in 2021. As for the statement of financial position, SOFP, the current interim reporting is 3 months, starting from 1st April 2021 to 30th June 2021. The comparative of SOFP end of the year immediately preceding financial year is 12 months, starting from 1st January 2020 until 31st December 2020. Meanwhile, for the statement of profit or loss and other comprehensive income, the current interim reporting period is 3 months, starting from 1st April 2021 to 30th June 2021. The cumulative for SOPL for the current financial year for the year to date is 6 months, from 1st January 2021 to 30th June 2021. The comparative SOCI of the immediately preceding financial year for the current interim is 3 months, starting from 1st April 2020 until 30th June 2020. Lastly, comparative SOCI of the immediately preceding financial year for the year to date is 6 months, starting from 1st January 2020 until 30th June 2020. For the statement of changes in equity, SOCI E, the cumulative financial year to date is 6 months, starting from 1st January 2021 until 30th June 2021. The comparative of the immediately preceding financial year to date is 6 months, starting from 1st January 2020 until 30th June 2020. Lastly, for the statements of cash flows, the cumulative statement of cash flows for the current financial year to date is 6 months, starting from 1st January 2021 until 30th June 2021. The comparative statements of cash flows of the immediately preceding financial year to date is 6 months, starting from 1st January 2020 until 30th June 2020. I'll be passed to Hasya and Fakhira for the adjustment sections. That's all from me. Thank you.
Thank you, Aishah, for the clear explanation just now. Alright, let's move on to the adjustments. So there are 2 adjustments that has been made for the second quarter as at 30 June 2021. But let's look at the before adjustment for the statement of financial position for the year ended 31st December 2021. The carrying amount as at 31st December 2021 stated as 1,491,684, where the cost of property is minus with the accumulated depreciation. As for the 31st December 2020, the carrying asset is amounting to 936,750. Under current asset, we got the inventories for 2,042,297 as at 31st December 2021 and 1,437,321 as at 31st December of 2020. This is the after adjustment for depreciation, but the cost for property, plant and equipment of Seng Berhad is 4,054,027 ringgit on the 1st of January 2021. The accumulated depreciation will be 2,562,343 ringgit as at 1st January 2021. By using a straight line basis method, the company depreciates all property, plant and equipment with 35 years of useful life. Seng Berhad also suddenly wants to dispose one of the property, which is a building with a carrying value of 600,000 ringgit. The initial price of the building is actually 750,000 ringgit when the company purchased it on 31st March 2021. Seng Berhad also acquired a new building which cost them 900,000 ringgit on 30 June 2021. So now the total cost will be 4,204,027 ringgit minus with the total accumulated depreciation of 1,872,400.53 ringgit equals to 2,331,626.47 ringgit, and the carrying amount is at 30 June 2021. I will pass this presentation to Fakhira.
Thank you, Hasya. Next is adjustment for MFRS 116. On 1st January 2021, Seng consolidated Berhad ending inventories of 2,042,297. The company had 100 million units in inventory at a cost of RM1.40 each on June 30, 2021. The cost of its inventory will change every year. On 30 June 2021, the NRV of the inventories is RM1.20 per unit. The expected NRV of the inventories as at 31st December 2021 is RM1.50. On 30 June 2021, the value of the inventories should be recognized at a lower on NRV, and HSCB inventories are realized at its NRV amounting to 120 million. Loss of inventory of 20 million should be recognized in the statement of profit or loss. On 31st December 2021, the value of the inventories should be recognized by using the cost of 140 million. Therefore, HSCB should reverse the 20 million inventory loss that was previously recognized in the statement of profit or loss. This is the answer of the statement of financial position after the adjustment. To prepare the statement of financial position, the company is required to record based on two things, which are the current interim and also comparative. The current interim refers to the second quarter, which is start from 1st April 2021 until 30 June 2021. Meanwhile, the comparative refers to the period of statement of financial position of the immediately preceding financial year of 2020, which is start from 1st January 2020 until 31st December 2020. The current amount of PPE for the current interim period and comparative is 2,331,626.47 and 936,750 respectively. Meanwhile, the value of inventories for the current interim period and comparative is 120 million and 2,042,297 respectively. That's all from us. Thank you so much.